Good morning and welcome to Trading with Larry. I'm Larry Benedict. Glad to be here on a Tuesday morning after a sleepy Monday. Although the markets came back from the depths of a 1% down move, which now at an 18 volatility is fairly large. I'm usually joined by Eric Shamalov, who is still out traveling. It's going to be nice to hear about his adventure wherever he went. He was in Florida last week. Not really sure where he is, or I can't disclose where he is. But back with me today is Thomas TD Maples. He's our data scientist slash analyst. He's actually the guy that controls pretty much everything in here, doing all of our executions that we do for the different things that we trade and recommend to subscribers. And he does a lot of analytical research. And, he was scouring this morning and he got in before me, which usually doesn't happen. It should happen, but it usually doesn't happen. But today it did. We have stuff to talk about. But again, coming off a quiet day yesterday and a beginning of the month that sort of started like the end of last month, which was higher. Markets opened negatively yesterday. We had numbers that I thought would have been a little bit important, but the market shrugged off, like ISM. They shrugged off producer prices, even though inflation was tame last week, or tamer than they thought by, just 1/10. But it's given them the market the feeling that it can hold up here. Yesterday, really, the number that was kind of the outlier was the imports. The tariffs are taking major effect. The number came in the lightest since '09, but you really can't even gauge it. I would say it's the lightest pretty much on record because, as the years go on, we're importing more, manufacturing's bigger, businesses are bigger, market caps are bigger, etc. So the number was disappointing. Market traded slightly lower off that number and then came back. So here we are this morning. Again, kind of the same mantra as yesterday. Dow a little bit weaker than everything out there, and Nasdaq stronger. When I woke up this morning, the Nasdaq was down 100, which is like 40 basis points, not too much, but has actually turned positive again on the day, a lot like yesterday's action and a lot like Friday's action. And S&P was down about 35, 40, and now is down 5. So markets seem to have a bid here. Volatility is contracted to low levels. Low certainly of this move, we're down in the low 18s. I don't know if we had a 17 print at any point during this down move, but it's looking like we're going in that direction. And I was talking to somebody yesterday. They're doing a piece, hopefully, that I'll be in tomorrow on Bloomberg, about volatility. They wrote a piece. They called me, and they asked me my thoughts on Friday. I'm sorry, it's not tomorrow, but Friday's jobs number and why volatility was pricing so low. And if we look out, which I don't really love to do, but since this may be printed tomorrow, I wanted to talk a little bit about it. But Friday's jobs number, the straddle is pricing in, which is the inherent move of the market for that day, of under 1%, which is unheard of for unemployment. But I was sort of explaining, and I truly believe that it's a lagging indicator. And even if employment has slowed down, it's not going to hop into this number until maybe August, September. So these numbers may hold up a little bit better, even though it's not the true story. And I believe that's why volatility is so low here. And if you check like CTAs, they release commitment of traders, and it's showing that in fact more people are the professionals are short vol here, which is shocking because it's really kind of low. But I think they're pressing on people who are long. A lot of people bought this vol all the way in because vol got up above 50 in April during the sell-off. So now people are what we call sucking on these positions and being forced to make moves that they really don't make because vol is coming in. But we'll get a lot more in depth on the employment number, which used to be the biggest number of the month for sure for the last few years. But right now, I don't think the number it's very important, but it's not as important as these manufacturing numbers and inflation numbers moving forward, because that, I believe, is more impactful to Fed market decisions than really the lagging number of unemployment, which has sort of really fooled people. Like if you look at last month's unemployment, when they came out with JOLTS and they came out with ADP and all the pre-numbers that sort of quote unquote give you the cue for what the unemployment number was, were a little bit weaker, and we were setting up for a weaker number, and the number was stronger. And then once again, bonds got weak and equities got strong. I do think, I feel like I don't want to be a broken record, and I want everyone that's watching me, especially people that don't know me that well. I am very, very nimble. I trade with an opinion, but I let the market kind of dictate that to me. So right now, I'm thinking we're at the top of the range, and that would be just below 6,000. Now we can take that out. I don't think we will, but we can. But I don't see a move extension here that would make it worthwhile to put on major longs. But again, to get the down move, we're going to need some type of catalyst. I don't know if it's an event driven catalyst. I don't know if it's a conglomeration of data moving forward that's going to cause us to correct a little. But, it's very difficult right now. And, we haven't added to positions probably in 2 to 3 weeks. And people that have been with us for years or even as little as a year know how active I am. I'm very, very active. I'm swinging positions. We're moving in and out of stuff within inside of a day to 3 days. And when things are really rolling well, we could have a month where we make 30 to 40 trades, maybe even more, like in the month of April. So right now, we haven't done a lot. We're sitting in our shorts. They're not really working. We're going to have to reassess, determine whether we want to roll these positions out a little more. And when I say roll these positions, I take them from right now, the August expiration, and maybe take it out to September, October to give us a little bit more time. We have to pay for that time, but it may be worth it at this point. But we're really not going to assess that probably for the next few days. But moves will be made. We're very, very lightly short the market. But again, I'm not seeing a lot of stuff going on here. And, even though the market's tipping at the high end of the range over the last few weeks, we've been up to 59.95 and down to 5,800. So we've been in this 3% range stuck for the last few weeks for sure. So we want to be nimble. We want to preserve capital. We want to sort of preserve our wins. And that's what we're doing. It's eating away a little bit at our P&L, but I feel confident that things are going to change in here, and we're going to be ready to pounce on it. So I just want people that are subscribers to just hang with us, and we will have a lot of good things moving forward down the line. And it's been that way for years and years and years. And really even prior to the opportunistic trader, which has really been in existence for about 8 years, 9 years out to the public. But prior to that, in my hedge fund, which I ran for 13 years, and did that with no losing years during that period. And listen, in anything, in trading, you have to be able to withstand the down moves and in your P&L. So again, I know it sounds like beating a dead horse, but I want people out there to know that they are, you know, they are okay sitting on their hands. Don't average trades, sit tight. We'll make decisions that make sense. And it's important to really keep that in your arsenal. And that's the most important thing to trading. And, I talked a little bit about it yesterday, but really money management is the most important thing. And you can equate this to other things. Let's say we talked a little bit about backgammon yesterday or poker. Listen, if you're getting unbelievable cards and I wouldn't say a novice, but if you know how to play the game, you could beat a professional. You won't beat that professional over time, but you can beat that professional in a short sitting. So it's the same thing in trading. Yeah, you could get lucky averaging down a losing trade or going outside the disciplines that we try to instill in everyone, but over time you will lose your money and you will not be successful. So I think it's important to stick to our knitting, stick to what we do, and make sure that we're not doing that. Now, you might want to average down, but it doesn't really make sense over time, and you could win. Listen, there was a trade about a month and a half ago in currencies where for my currency wizard product, OFX, we had some long we were long some currency, and they got hit, and then all of a sudden the market came back the other way, and we would have made money on that trade, and we got stopped out. But we have to have that discipline, because if it didn't come back, it could have been really, really bad. And I've seen that happen in my 40-year career many times, where one trade has wiped people out. And, whether it's the yen carry trade or one that I remember that took out a lot of hedge funds is when the Swiss government took the peg away from the Swiss franc against the dollar, and everybody was positioned betting against the Swiss central bank. And ironically, the guy who was running the Swiss central bank was a ex, Wall Street guy, and he pinned the market, or he took the market out in hedge funds on that trade. I know one in particular, Everest, down in Miami, lost all their capital on one trade. So we don't want to be in those positions, and markets, believe it or not, can carry people out, and I've seen it a lot of times. Equities in general over the last bunch of years have been forgiving, and everybody has been rewarded who has bought the market, because think about it, the S&P is 3% off an all-time high, all time. So we're on an all-time high. So anyone who has bought the market, I wouldn't say particular stocks, because we can get into this later in the week when Eric gets back, about the breadth of the market and how really it's not expanding, it's contracting. And the breadth, when I say the breadth, it's advancers over decliners, has really looked horrendous here. So really the extension of the up move has come from the same, 10, 15 stocks, not even. Maybe it's down to, the Mag 7 or inside the Mag 7 even. So, the breadth has been not great. But if you're buying index funds, whether it be S&P or Nasdaq, you're doing pretty well, and you've been rewarded on every dip. And it's created what I consider to be a Pavlov's dog, meaning that they ring the bell, and every time they ring the bell, the dog eats. Okay, it's the same thing in the market. They ring the bell, the market goes down, the dogs come out, and they buy more, and they get rewarded. So that's the market we're in. It's very, very tough. On the retail side, no retail customer is selling any stock. If they withstood a 30+% down move in Nasdaq in a month and 20 plus in S&P from the high in a month and didn't sell, they're not selling now, which leads me to think we could test lower bounds later in the year, but that's not setting up right here. Let's just get a little bit to the macro landscape right here. And right now, bonds are sort of in no man's land. We're same spot as yesterday, 442, 443. When we were on the air yesterday, they were weaker in the morning at 445, got down to about 440, and now are mid-range of that. But we're talking semantics, a few ticks. So I think maybe we're waiting for the bigger move to occur on Friday off the unemployment number that is coming out. And I'm looking over at my Bloomberg, and JOLTS came out, sort of in line, not really showing a lot. And durable goods, etc., in line, actually perfectly in line. Factory orders down slightly. So we're not getting a lot out of the numbers. They do look a little bit weaker, and employment looks a little bit weaker, but nothing really to sink our teeth into. And, I think yesterday was a continuation of the MSCI month end buy program that we had on month end in May, which was a extremely solid month, one of the best months in years. So again, we saw buying. I don't think we're going to see that buy extension today, but we'll have to see again what happens. Yesterday was shocking to me, and one of my best products that we have is our S&P spread trader, where we sell put and call spreads in the market on a daily basis, 0 DTE, so 0 days to expiration. That product is not up on the year, it's down on the year, and that product in the last 8 years has not had a losing year. It's like our best product. It's crushed it last year, crushed it the year before. This year we're struggling. To be frank, every time we get close to even, we lose. We lose money on the spread, and that spread product basically looks out of the money in both puts and calls, and we do 15-point credit spreads on both either side of the market, depending on what we're looking at. And the max loss on that is 15 points less the amount you could take in for the spread. And again, that is not working. I am fairly confident that product will be up good on the year. I do expect a lot more volatility in the second half, which will give us opportunities to do that spread on a daily basis. But it's been choppy. So people that are in that product, I want you to sort of hang tight. Don't get bigger. We got to withstand the pain here of not making money. But again, I believe truly this product will be back and doing well. Let's look at the dollar for a second. We were looking at the weakness in the dollar yesterday, which was really interesting. It got up to about 114.5 on the euro, which is near the low range of the dollar on the entire move, and the level where we were when the S&P was 1,000 points lower. And today it's been very hard to judge. Today the dollar's actually stronger across the board, stronger against the yen, stronger against the euro and the British pound. So it rejected off those highs. We do think those highs could be taken out here. But again, if there's a little bit of a sea change in the market, you have to be careful that the dollar can catch a bid here because it's at interesting levels. Thomas, where is the straddle for today? So the straddle for today, which is a measure that we look at to, get an idea where the odds are or where the professional traders are betting the move is going to happen. And they're only pricing in $30 on the straddle, which is a 30-point move in S&P from right here, which we think is very low. It's been higher pretty much every day coming into today. So potentially the market is pricing in sort of a quiet day. I don't know if that's going to happen. 30 points is not a lot on a $6,000 product. So we're going to have to pick our direction if we're going to do an S&P spread today in the right way so that we could capitalize on the move. Shifting over to crude oil, again, got up to the highs around 64 and a half, rejected off that, got down to 62, and today is up $1 at 63 and a half. Again, we were thinking about doing a trade there for our LOT or the opportunistic trader product, the long option product on the upside, buying a call potentially on USO or an integrated oil, but it hasn't really broken out. So we're going to sit tight. And if I was doing really, really well right now, we would jump on that trade. But since we're not doing so well, we want to really be nimble and pick our spots when we're adding here. So we don't see a trade there. We're gonna sort of sit tight right now. And gold had a huge move yesterday, up over $90, and today giving back about 70 basis points or $25. Again, sort of on the higher end of the mid range, but still mid range off of the 35.50-ish high down to a 31.50-ish low, and now we're 33.58, which is actually mid-range. And I know everyone out there, I'd love to see the commitment of traders, see what the hedge funds and CTAs have in gold. I'm thinking the market's pretty long, but again, it's definitely trading well. So dips for the moment can be bought, but I don't see a trade there either. Looking across the board at, the foreign markets, they've performed so much better than our market. So, it's really been, especially we saw this at the beginning of the year, and it probably continues throughout the year. Although I do think that Europe may be a short, and you may capture a little bit more doing, I hate to do it because I like to attack one thing, but I'm going to do this in the name of Eric because he loves these intermarket spreads. Maybe shorting Europe and buying the US as DAX is up 20% for the year and we're not even up 1% for the year. So, after today, if the market stays down, the S&P is up like 70 basis points, Nasdaq slightly lower, Dow slightly lower, and you got, the DAX and Euro stocks up 20%. There may be, a pullback there. I'm going to look at that. But we're looking potentially to short European stocks here. It's sort of outside the box. We saw since the year opened, people are shifting their money out of the US and into Europe, which is really, if you think about it, an interesting thought. We're the guys that are quote unquote tariffing everyone. We're making it difficult for them to bring goods in here and sell goods, whether it be cars or whatever they're selling in the US, virtually impossible, or definitely eating into the profits of these European car makers as well as other businesses, but they're shrugging that off, and it's also seen in the dollar. We thought with these tariffs and with Trump being elected at the beginning of the year that we would see parity, which is par on the euro, and we're sort of going the other way. So I think there may be, a dollar problem later in the year as well as a bond problem. I don't know if that leads to the correction that we're, perceiving will happen into sort of the mid to end of summer. But right now, overall, as you can see with the straddle pricing, the market is pricing in not a lot of move today. I don't see a lot going on. Nasdaq is flat, S&P is down slightly, and they keep buying the same names. Facebook, Palantir, all these names, they just keep piling into the same names. They were buying a little bit Nvidia. They're buying all the same names. So right now, sit on your hands, wait to see the move. If the market gets down to like 58.50, which is only 1.5% from here. It's not a lot. We may add to our short positions, but right now we're sitting tight. We're letting the market sort of dictate to us. It's sort of swirling around. Before we had Nasdaq weaker than the Dow, and the Dow was outperforming, and now that trend for the last 2 to 3 days, and I don't know if it's inflow related. We can check that tomorrow, but Nasdaq is seeing, a better upside than all of the other index, which at the beginning of the year, it was kind of flowing out of that in February. Those markets were hit a little more, but we're very quiet. Straddle's pricing $30 here, not expecting a huge move. I don't know if we're waiting for the employment number again. I don't see a lot in that. Tomorrow we have ISM services numbers. So, that tracks prices paid, new orders, employment. So it's going to give you the gamut of everything that the Fed looks for. And it's a real Fed number. But the Fed is stuck here. People, Bloomberg asked me yesterday, how many rate cuts do you see this year? And it's funny, I'm kind of seeing none, actually, if the markets hold up and growth holds up. We may sneak one or two into the second half of the year, late in the year, in the fourth quarter. But right now, the Fed is stuck. The Fed can't do anything. They're monitoring inflation. They're monitoring what the tariffs are going to do to the market. And they're kind of stuck, and they've been lucky in the sense that inflation has sort of showed, it looked like it was ticking up fast and a lot, but the end of last month, the numbers have showed that it's not. And the growth numbers are still showing up at growth. So the Fed is kind of getting what they want. It's the perfect environment for them. But right now, they don't have to make a move. I think they're really kind of happy about that because it's very hard to judge what's going to happen moving forward. And really, tariffs, which was our talk of the day every single day, are not even really relevant now. And the more interesting part, and I don't want to get stuck in the weeds, but the more interesting part is that there were supposed to be all these amazing trade deals and this one coming to the table and that one coming to the table. And I think what's happened in the environment is people realize, I don't want to use it, but the taco trade that Trump always chickens out is really the flavor of the day. Just wait for him to he's caving on himself. Like, he's lowering tariffs when no one's even countering him. So right now, they're better off just sitting tight, not making a deal. The people that look a little bit silly are the UK. They ran in and did a non-comprehensive trade deal that probably wasn't in their benefit, to get out in front of it. And now, out of all the countries, they're the only ones that have done anything, and they look kind of silly because they had no reason to. And the EU, which was freaking out, about all of this stuff, seems to be sitting tight, and now they've been given till July to come up with an answer to the tariffs. And who knows if July comes and they just roll it back another 3 months. So, and now you're into the first full year of Trump's last term, and they're going to outplay him. So I think there's going to be a lot of tariff gaming. I think there's going to be a lot of anger in the country, but overall, I think for right now, tariffs are not even important. They're not even anything anyone's trading off of thinking about, which is amazing because it's only been a month and a half. But, that's sort of our thought on that. And we think Vol potentially in here, coming into the beginning of the summer, may come in even more because I'm not seeing what could really move us in any meaningful way. Now, that could change in an hour, but for right now, and markets are pricing this with vol being 18 and inherent straddlers for the day being $30, that not a lot is happening. So again, we're going to guide you through this. It's a quiet period in the market. News is looked at in a positive light in general, with nothing really negative in play. But again, as I've been doing this for 40 years, which is shocking to think about, markets are ever changing. And, things that we look at today in 3 days or 3 weeks, we may not be looking at. So, really, the smartest thing to do is be patient. So, I'm asking people out there to be a little bit patient. We're going to catch the moves, we're going to be there. But right now, it's very, very important to trade with discipline and trade with patience. So I want to wish everybody a really, really good trading day. Again, it may be a little bit slow, but keep an eye on external news. But unless we see that, potentially quiet day all around on light volume. I wish everybody good luck trading in. Peace.